And a reminder, trading is risky. Use capital you can afford to lose or don't trade. Very risky business, especially what's been going on lately and leading up to the elections. And looking at a few charts, we can see that we had a big washout and everybody proclaimed the demise of Trump's administration. And yet we've seen a terrific bounce back ever since the end of October, leading up into the elections, which can be interpreted as a profit-taking swing. And beyond that, nobody knows. Take take a look at a couple of ETFs. This again using the widget. Just set a base setting on it. Don't have to do anything fancy. Don't cloud your mind with all the other indicators that you like to use. Volume and stochastics and MACD and whatever you can certainly apply in a different panel, but we're just focusing right now on the pure price action. Anybody that has bought, the end of the hour is coming. Anybody that has bought, make sure you are paid by that 82 to 85. Trail only above that. 85 is our demon, a reminder. This is the ETF diamonds, and we can see how we had this great big sell-off throughout the month of October. And then, if you want to go and just do a basic pattern, we can kind of see these inverted head and shoulder patterns. And we know that first things first, the things we've talked about that we're studying through E-mini, you can apply to all of these patterns. So first things first, you're looking at these highs over here as a target zone that the boys need to dislodge. That's first things first. So learn to identify these areas and see where on the long side the boys are trying to drive. If we get above the 256 and a quarter, then obviously the next target resistance comes in at 259 and a quarter, round numbers. So this is the box we're fighting in right now, step by step. And if we need to look at where is our support and where is our resistance, then obviously we're going to go and take a look at this as our support box. And this is the box that we just got resolved. And now this is our fighting box. Simple as that. Just keep it simple. Don't confuse yourself with too many indicators and too many ideas. There's Facebook, same pattern. Sell off in October, strong bounce back into the elections. And we're also looking here, obviously, at gaps. Look at how they've used gaps to elevate and move the market up. This is historically what goes on. And when everybody is screaming the loudest that, forget it, so the party's over, I guess maybe party hats are still on. And this range type trading, obviously, but step by step, you're going to look for each box. IWM. Zeke had suggested that this one was not perhaps keeping up. Well, here's our objective criteria, and we can identify gaps very easily on a chart like this. Back here, back here, back here, and step by step, we know not to get ahead of ourselves. So currently this 153.75 area, an important support. And now tackling the next resistance. And you're going to find these aren't going to always be exact, but you'll be amazed at how often they're going to come close to those neighborhoods. And then really in time, you can start to see patterns. So we talked about this before. This is a Z pattern, where you come down and then you bounce back towards the middle. Anybody that is long side trail above the 85. And again, even if we get a little push at the end of IB, even if we get a breakout, I'm still not expecting a big travel range, even if we do take out that high. So paid for sure. And these rising moving averages that we talked about are the reason that you can't just expect a plunge. Going to take time to cool this baby off. And that said, I think we've got stolen range because nobody wants to just close their eyes and buy and think that this is going to run forever. So hit and run, however you're playing, we had this pegged fairly closely for the IV that would get somewhat of a narrow range market trying to build a high level base. Neither side could expect to get a big move. Thank you, Zeke. And this is basically educated guessing. So here's your cues. And we can see the use of gaps. This is one of the boys' favorite methods of moving markets is gaps. And you can see all of the gaps and look at the pattern. This is basically the month of October. And look how we've had the sell off, and when everybody's screaming, then we get the big bounce. So one of the things I try to do is listen to both sides, the argument for both sides. And when one group starts to get extreme, then you have to think, okay, well maybe it's time for a contra. And that's certainly what's happened so far. And easily identifiable support box, rejected, fighting box, pushed up, got through this box and trying to hold and come back up here. And we know that this is a double top area right here that has to be taken out for any further upside. And my guess is that both sides are going to be a little disappointed they don't get quite as much today as they want. A little bit of a squeeze, and we're going to keep an eye on IB breakout if we get one, and continue to monitor that, because obviously we can take out the high, but can we maintain that territory? That's the question. So I think there's a little bit of a squeeze type trade on shorts who expected too much first pullbacks, and usually first pullbacks are buyable. That's why that green line we were looking at. So this 90 and a quarter is top of that box, and it doesn't mean it has to stop exactly there or whatever, but we're using that notion of make sure you are paid coming into 90 and a quarter to 92 and a quarter. Anything above that, good fortune. And then we're going to monitor this 87 as the day, wears on, because back under it will start to tell us that we're bleeding back. And good fortune above 85. Don't forget, that was our demon. And today is one of those days where you can buy high, sell higher if you have the inkling to do that. Just as valid as trying to close your eyes and short. And we like to use objective criteria. Not emotionalism. And certainly not rah, rah, rah. We're very, very humble, as you know. It's the only way you can participate in this business. First time you get overconfident, you're going to get your head handed to you, and that's that. Nobody knows where it's going. We make our best educated guesses. But we do have objective criteria that we look at, and we feel confident in the methodology. And here's that target being tagged. Anybody that is up past the 85s, tighten up your stops. Don't mean to be so conservative, but you know me. Currently, there is no demon. Those of you who want to take a shot at the short side, remember, you're not looking to do it yourself. You want some evidence, day like today, that somebody else is willing to join in the party, pushing back, or at least taking profits. So I would think that this would be, any pullbacks are more a question of traders taking some profits than that the shorts are gleeful about trying to jump in here. I've forgotten whether we did the XLF or not, but you can see that pattern, clear inverted head and shoulders pattern, and the use of the gaps to get the get the banks moving. Gaps. And obviously there's a double top zone right in here. So currently support box in the pipe, trying to bust out of the 27, and then the next level is right in here. Anybody that's got 92 and a quarter target, we get there, 92 and a quarter, I'm considering that target achieved. And we can go to any high today, but that was our primary target. We said pre-market. And once again, the system works its magic. We had suggested make sure you are paid 75s, 76 for sure. Don't expect that we're just going to plunge. And don't expect you could just come and run it out the top either. But the best chart that helps this is that 5-minute chart. And the Globex 15. Certainly that one is a good chart too. Great chart. Celebrate your small victories, ladies and gentlemen. Make sure you're paid. Take some time off and relax. If you had a good run, you do not have to just turn around and close your eyes and short. Give your body some time to relax and take some stress off. Two-way day. Buy high, sell higher has worked. This is still MATD. Obviously, that 72 is going to remain as support until broken.